Hi, Brad Walchek calling in with Premier. First off, I want to thank everyone for taking the time to attend today's webinar. As we've all seen, the home healthcare market has exploded these last couple of years, with carriers stepping up to address the need for their clients. With me today, I have Doug Bradt from Cigna to go over the latest short-term home healthcare product on the market. One thing that stood out to me when I saw this product was really the simplicity of it, yet addressing all the needs of the client by offering either the optional rider to increase their home health care benefit or the inflation protection. So there's actually a lot more to it than that, but I really don't want to take away from Doug's presentation. So during this webinar, I'll address any questions that come up on the message board, but if I don't have time, I'll bring them up at the end for Doug to go over. So with that said, I'll let Doug take it away.
Fantastic. Thank you, Brad. And I want to start by just telling you guys really appreciate the partnership that we have with Cigna and Premier, and just something that we really look forward to opportunities like this to talk to you guys and also the agents that are out there in the field. So having said that, just wanted to tell you guys a little bit about myself. My name is Doug Bradt, Regional Vice President with Cigna Supplemental Benefits. Super excited about this, to be talking to you guys about our Cigna Healthcare Choice short-term care plan. About 25-30 years ago, I actually cut my teeth in the long-term care, extended care industry. So I've got a tremendous amount of passion for this product, and I think you guys are going to see that as we go through the material today. So let's kick it off, Brad, and just want to go over quickly an agenda with you guys, and we're going to kind of go through this material fairly quickly, but happy to expand on anything that anyone might have additional questions on. So we'll talk a little bit about the policy overview. I think what the insurance carriers like Cigna and others, I mean, we do a fantastic job of what I call quote unquote kind of product dump, right? We can do great presentations on product and tell you all the ins and outs and the whistles and bells. One of the things that we kind of forget about is that consultative selling strategy, right? How do we go ahead and position short-term care at time of sale? Is this a pivot or cross-sell from another product, whether it be a Medicare Advantage plan or a med sup? So we do want to talk to you guys today about the consultative selling strategy with this. We will go into a product deep dive as well. We'll go over some rate samples so you guys can see that this is a super cost-effective way to address one of the exposures that they have in their insurance portfolio. And then we'll walk you through the application, right? Application, Brad, you had mentioned it earlier about simplified and simplification. I think you're going to see that as kind of a general theme and trend around this product, and that's why we're like super excited about this. Before we actually go into the product, I want to tell you guys too, to bring some credibility to Cigna and this short-term care plan. The great thing about this plan is we've taken some of the top short-term care, long-term care agents in the market. We've actually roundtabled them up. We brought them in to our place, and we said, hey, listen, we want to develop this product. We want to be super competitive in the marketplace, but we need to know what it is that you guys need to have out there in the market when you're selling this product. So after about a year of product development, working with agents just like yourself, we were able to put this plan together. So I can say this is a product designed by agents for agents, which I think is super important when we're talking about kind of the credibility of this product. Gang, our mission at Cigna really is to improve the health and vitality of those we serve. I think you're going to hear this too. Our products, we like to be simple, predictable, and affordable. And you're going to see that as we continue to go through this presentation this morning. So kind of Cigna value for brokers. What's in it for you? Right? What's in it is obviously this is an international recognized Cigna brand name, and I think that's super important. At the end of the day, we're selling a piece of paper and a promise, right? We want to make sure that that company is going to be there to deliver on the promise in time of need for your customers. And there's going to be a lot of carriers out there that are trying to get into the short-term care market, some that are new to the industry. I'm not saying anything negative about that. I just know personally, when I'm purchasing something, I want to make sure that the value is going to be there. I feel confident in the company, and I think that's important. So we're a Fortune 15 ranked company, one of the largest insurance companies in the world. I think that's important too to your customers, that they understand that. For you and for the consumer, I mean, we got cost-effective premiums, so our rates can we can kind of tailor make these products to find what works best for the consumer. This is also super important. All of our policies are guaranteed renewable for lifetime. So as long as your customer continues to pay premium on it, the policies are guaranteed renewable for lifetime. We like to think we have tools and services really to help make this easy for you to quote, for you to write. We've got phone sales capabilities for all agents. One of my top agents is in Dallas, Texas. She actually sells all over the country, right? So we want to make sure it's very simplistic for that, and we can accommodate those needs. We've got e-signature, right, available for in-person remote sales to allow that smooth application. And this is important. It eliminates the need for the phone verification. I can always promise if there's delays in application, it generally comes from the PV, the phone verification, us reaching out, trying to get in touch with the customer. You know, it's back and forth, you know, call game, and that could take 4, 5, 6, 7, 8 days, and we want to avoid that. So we got e-signature features that can eliminate that. Our fast policy issue time, average turnaround is 3 to 5 days, and gang, good thing for us. I mean, we're paying our commissions daily to you, and I think that's imperative, right? You guys are out there beating the streets, doing everything you can to you know, provide solutions for your customers. We don't want you to have to worry about commissions and how they get paid. And then we've got kind of our award-winning resources that are available. Agent Resource Center. We got reps that are staffing that center all day long. It's an extremely simple process. Dial into the number 877-454-0923, and they can answer all the questions that you have. If there's anything that needs to be escalated, we ask you to escalate it up through Brad if there's issues or something that we need to know about, and surely Brad can get in touch with me, and we can make sure that we can handle any of the situations that come up. So let's take a peek at the Cigna short-term care plan. We're going to take a deeper dive into the product functions here by giving you a quick kind of, we like to say, high-level overview. You guys heard that, I'm sure, in corporate America. But one of the things, again, that makes our products simple is we like to use the similar age band with all of our other products. This is available for issue ages 18 to 89. Like I mentioned, it is guaranteed renewable for lifetime. There's no application. There's no underwriting policy fee or annual policy fee here. Again, underwriting is very simplistic. And gang, I'm going to kind of steal a little bit of a line from our Medicare supplement that's doing so well out there in the market. That's kind of a testament to you guys as agents. But we've got one of the highest spousal discounts in the industry in MedSup. It's 20% in all the states that will allow us to have that type of discount. So we're going to kind of borrow that line from MedSup. We're going to borrow the line from Vegas and say, hey, we're pushing all in on our primary and spousal coverage discount here with this product as well at 15%. We've got really 3 simple plan options: our Choice 100, our Choice 200, and our Choice 300. So that's your daily benefit. Gang, if you are new to the extended care industry, if you understand these 3 variables, you'll have no problem explaining it. The first variable is the daily benefit. How much do we want the insurance company to pay when it comes time they need care? Right, so we've got the 3 plan options, 100, 200, and 300. Then the second variable is how long, or benefit period, how long do we want them to pay for that care? We've got 2 simplistic options here. One is 180 days, and the other one's 360 days. And I'm going to go over that a little more in detail because we've got 2 separate buckets that they're actually drawing from. So it can actually be almost double that coverage. And then the third variable is going to be the elimination period. Elimination period is the period in time in which the insured pays for care prior to accessing the benefits. We've got first day coverage with 0, and then we've got a 20-day elimination period where they assume some risk, right? And I'm never going to tell you Medicare is going to pay the first 20 days. I know a lot of agents sell it that way, but we know there's too many prerequisites in order for us to guarantee that. Once you've developed that and you understand those 3 variables, then we've got a few different inflation, a few different riders that we'll talk about. One be the inflation protection, and the other one being the home care booster. And we're going to talk about that as we go through subsequent slides here. Gang, no network requirements, no coordination of benefits. There's no gatekeeper in this plan. Benefits are paid directly to the insured unless you specify otherwise, right? So that's great. A lot of the old long-term care plans, they had gatekeepers, care coordinators, folks that would kind of protect the insurance company. But gang, this is not that type of plan, and it just makes it's more of an indemnified plan so that the customer gets what they're paid for. So we can talk about why the need for short-term care, why the need for extended care. I'm going to tell you it's one of the larger exposures that an insured or a senior has in their insurance portfolio. The percentage of folks that require this care, especially over at the age of 65, just grows every single day, right? Modern medicine's keeping us all alive longer. There's such a drastic need for this. We don't want the seniors to have to worry about the cost of care, the fear of burdening their family, and you surely don't want them uncertain about their future. This is something that weighs on them. If they're doing proper kind of retirement planning, we want to make sure that you're talking to them, right? It's incumbent on you as an insurance professional to do your due diligence, right? To make sure that you're uncovering the exposures that they have in their insurance portfolio. And surely you can use some of the statistics that we have here up on the slide. So let's take a peek at our state availability, right? So right now, this is our state availability map. This is a product that we just recently rolled out back in April, May. So we're, again, super excited. We've applied to all the departments of insurances for approval. We know we probably won't get it approved in Florida, but we do have a good shot in about 40 plus states. So we'll be rolling more states out. Additional states will launch, and we'll surely allow Premier to know when those additional states launch so that they can cascade that information. So if you don't see your state on here, don't worry, it could be coming soon unless you're Florida. So I just want to put that little caveat in there. Okay, why should you sell short-term care insurance? Let me start by saying, again, insurance professional, you're a trusted advisor to a lot of these folks that you sit down with. By definition, you have to give advice, right? And some of the advice is talking about the exposures they have in their insurance portfolio. As insurance professionals, we do a great job addressing the hospitals, the doctors, the medication. One of the things we drop the ball on is the extended care, whether that be a short-term care or a long-term care. This is our opportunity really to do a great fact-finding mission and start talking to folks that you see for short-term care. This can generate new clients, which is super important. It, of course, can benefit your current clients. So what I like to say is if you're selling a Med Sup or a Medicare Advantage, there's got to be a way that we can lock that back door, right? The back door, prevent other agents from coming in there and selling short-term care, dental, vision, whatever it may be in the house. And the only way to stiff arm that competition is to make sure that you've wrapped that customer up very comfortably. They're comfortable with premium, but they're also comfortable with the benefits that they have in the plan. And of course, listen, we're not philanthropists by any ways. I mean, you guys are doing a great job helping folks out there on the day-to-day basis, providing insurance solutions to protect them in the event they ever have situations where they need it, but you can also earn a very nice income in doing this. I was mentioning to Brad before we kicked off the call today that I've got an agent that's already sold 9 of these plans since we launched. He reached out to me and said, Doug, I'm going to increase my income this year by 6 digits, right? He's going to make an additional 100,000 plus this year alone selling short-term care. He's adapted it into his everyday sales culture. When we first started talking to him, I said, hey, let's implement a Just Ask campaign. What does that mean to you? Is maybe on the next 15 or 20 appointments you have, whether that's virtual, in-house, whatever it may be, make sure you ask them, right? What have they done to prevent to help compensate and pay in the event they need extended care, right? Do they have any personal experiences with extended care, whether it be nursing home, assisted living, in-home care? We want to make sure that you're extracting that information out so that you can start working with that customer to provide them that solution. All right, so let's look at kind of the short-term care market, where it's going, kind of where it's been, where it's going currently, or not currently. Currently, we sit at around a $43.9 billion-dollar industry, right? Think about that. Let that resonate, not million, but billion. It's projected to be in the next 10 years, $110 billion industry. So more than doubling, right? And again, that's modern medicine, keeping us all alive longer. The need for this care is never greater than it has been today. So again, it's incumbent upon us to do our due diligence, making sure that our customers know about it. The market share for the extended care. Market share, it's going to be female, right? A little more female heavy than male. Females outlive males, so the probability of them requiring care is going to be much greater because they're living longer, right? Males have a tendency to go a little bit quicker, but by the same token, you could see it's almost a 50-50 split, 57% women and 43% male. And then you'll see here just kind of some market share stuff. This is, what we're trying to do. Your typical consumer is going to fall somewhere in that 60 to 70-year-old consumer, right? There's an old saying in short-term care and long-term care, if you buy a policy today at age 60 and had it to your age 80, it's a lot cheaper than if you bought it at 70 and had it to your age 80. Not more importantly, the insurance company is taking a snapshot of your health at age 60 and they're locking you into that for the rest of your life, which is great. So it's definitely harder to get when you wait, right? And that's something that we'll talk about here in a second too. So let's go over just kind of a few selling strategies, kind of the differences, right? What's the difference between a short-term care plan versus a long-term care? Short-term care, we're definitely going to have lower premiums. It's more cost-effective, right? We're not paying out exorbitant, unlimited benefits that a customer may or may not need, right? So our premiums are going to be lower here. Benefits are typically limited to 1 year, but we've got a bucket, and I'm going to show you how we can kind of manipulate that 1 year. As opposed to extended for unlimited years with a long-term care plan. They're unisex, right? Our rates are unisex. Again, simplistic. We've got a couple different rate classes I'll show you versus sex-based on long-term care. And short-term care, we've been around forever. This is a tried, true, and tested market. Long-term care, again, gang, I got into the business back in the mid-90s. I mean, it was great. Everybody could get long-term care. It was affordable. Underwriting was simple. If you're on 50 units of insulin, you could find a home for them. But now it's gotten so difficult to get. So it's a little bit more challenging. It frustrates the agent because they go through this long process. They go through the underwriting 6 to 8 weeks, whatever it takes, all to find out they get a decline. So they can get they can get frustrated with that. Our elimination periods are very simple, 0 to 20 versus elimination periods in long-term care. I've seen them all the way up to 365 days, right? You can go a 90-day elimination, 180-day elimination, and a 365-day elimination. That could be a $70, $80, $100,000 deductible, depending on where that consumer lives. And then underwriting, it's simple, right? It's simplistic versus the strict underwriting procedure that you see when you're talking about long-term care. Same requirements as far as accessing the benefits of the plan, the inability to perform the activities of daily living, bathing, eating, dressing, toileting, transferring, incontinence. If you're unable to do 2 of those, you can access the benefits of the policy. Or if you have memory loss, you can access the benefits of the policy as well. Again, no gatekeeper there. We just need doctor's note stating that you fall within those parameters. So let's take a peek at this plan for the unplanned, right? When you think in terms of short-term care, extended care, really you got 4 solutions for this type of care. And this is a great way to present it to a customer. I've utilized this my whole career, and just really getting them to understand if they're planning for this care, what are your real true solutions out there? The first solution that you have is rely on the family, right? I'm a son of 2 seniors. My parents both have this type of plan. Doesn't mean, of course, that I won't be there for them. I've got 3 kids, and then surely they don't want to put the onus on me to be a primary caregiver. Plus, I'm a son, I'm a male, and we're maybe not as nurturing maybe as my sister would be, right? So I'm sure my mom doesn't want me in there helping her with bathing and dressing and things of that nature. So relying on the family could be a serious challenge, and really getting that consumer to understand that, I think, is super important. The second solution for this is Medicare and Medicaid, right? Let's understand what Medicare will pay. Medicare is not designed for long-term care. It was never designed for custodial care, so the inability to perform activities of daily living. Medicare does have a small amount of rehab stuff, providing you meet several prerequisites of the hospital stay, continually rehabilitating from like a hip replacement or something like that. But Medicare is never designed for it. And then Medicaid, right? Medicaid, they didn't work their whole life to qualify for Medicaid. You got to be financially impoverished in order to qualify for Medicaid. You lose a little freedom and flexibility of choice when you're with Medicaid as well. You don't have flexibility to be taken care of in certain areas and being taken care of at home and in the facility of your choice, right? So then the third solution for this is self-insure for the cost yourself, right? You have auto insurance, homeowners insurance, you've addressed your doctors and hospital bills real well, you've taken care of your medication costs, but what you've done is you've probably uninsured, right? You're self-insuring for one of the larger exposures that you might have in your insurance portfolio, and that's extended care. So we want to make sure that they understand what the cost of care is today in various markets, where they live. We can provide all that information to them. So if they live in Connecticut, right, their cost of care is going to be much greater than if they lived in South Carolina, where I'm at. Okay, so we want them to fully understand that. So really, what's the final solution for this type of care? And that's really transfer the risk to the insurance company, right? Pay pennies today to get dollars tomorrow. That's essentially what you're doing. You're paying pennies today to get dollars tomorrow. In the event you require this care, it's a structured format. It's very planned. It's planned out very well, and it does give the family members peace of mind that you got coverage in place. So that's really kind of planning for the unplanned, if we call it that. And then, of course, you got statistics out there. And this is one of the things I mentioned earlier. I always like to talk about insurability versus affordability. So when we sit down and we talk to a consumer about extended care, every year they wait to purchase the plan. Guess what's happening? And that's a question that I always ask to them. What's happening? The first thing they say, it's getting more expensive to buy. Right? And yeah, of course, you know, I'm a consumer. We're all consumers in many ways. It gets more expensive to buy, but I sit in front of you today as an insurance professional. I'm surely concerned about affordability, but I'm more concerned about insurability. So what we need to agree on is every year you wait to purchase, not only is it getting more expensive to buy, which is your concern, but it's also getting much more difficult to get, which is my concern. Right? So the sooner you buy coverage, the greater chance you have to lock in at that affordable rate. And again, remember, I said earlier, the carrier is taking a snapshot of your health as it is that day and locking you into that for the rest of your life, which is great. So that's just some of the things that we like to talk about on how to position extended care, insurability versus affordability, and then also reviewing the solutions for them so that they have a better understanding out there. So here's what Medicare doesn't cover, right? So everyone likes to think Medicare or MedSup or my MA is going to cover this. We just kind of point this out so that you understand it doesn't cover in-home personal care, custodial care. That's help with your activities of daily living. It does cover a small amount of skilled nursing, providing you've met several prerequisites, right? The hospitalization, continually getting better. But it's important that we show this, that you understand that this is not covered by Medicare as well. And we want the consumer to understand it's not covered by Medicare. If they think it's covered by Medicare, MedSup, or Medicare Advantage plan, then you haven't done your job, right? They're going to think they already have coverage in place, and then all of a sudden they require care, quickly to realize there is no coverage. So we like to talk about, right, evoke the emotion, right? This is a little bit of an emotional sell. It's quite a bit different than selling a dental plan or a vision plan. So we want to make sure you're asking the right questions, right? If you needed care, would you rather be at home or go into a nursing home? These are things that we got to understand. What's your experiences? Have you had personal experiences? How did you feel about that? Want to make sure that you're evoking the emotion. Let's talk about this stuff. So we like to say sell through storytelling. Have you ever had a family member going to a nursing home, get home health care? If yes, how did they pay for that? How did you feel about that? And then provide the numbers. Are you familiar that Medicare doesn't cover? Are you familiar that MedSup doesn't cover? Are you familiar that Medicare Advantage doesn't cover? Once you've evoked the emotion with the consumer, now we're right. You can even show some statistics about evoking the emotion, but now what we can do is we can now provide the solution. solution? Well, Mr. and Mrs. Jones, what I'm hearing you say, right, is you've had some minor experience with the extended care. Yeah, it wasn't very great. We weren't sure how they were paying for that, or maybe they've lost all their, their income and assets trying to pay for long-term care or short-term care. Now we can talk about how we provide the solution. And at Cigna, we can do it through a plan that's covered both individuals. That will cover individuals and spouses. We will complement primary medical coverage, such as a Medicare supplement and an MA plan. So that's important for everyone to know. We do have a facility and home care benefits under one plan. So there's no need for two separate policies. And we're going to talk a little bit more about that. And with our short-term care policy, there's no need for a medical exam, allowing for quicker policy approval, right? We're not going to go over the house, make them do jumping jacks or any of that stuff. We want to make sure they answer a few pointed questions on the application. Again, it's more simplified underwriting, which is great for you guys as agents. And then finally, give the customers financial support, out-of-pocket medical and non-medical expenses related to care for both in-home or facility care as they need it. We're going to pay it out in an indemnity base, a flat dollar amount. They can utilize that money as they see fit. We'll never dictate to them, right? We're never going to dictate to them how they spend the valuable benefit that they've paid premium dollar on over the course of the year. So gang, let's take a look, and I know I'm going fairly quickly, but let's take a look at our product here. Short-term care base policy. We've got our Choice 100, Choice 200, Choice 300. With the Choice 100 or the 200 or 300, we're going to pay that dollar amount for facility care, and then we're going to automatically pay 50% for home care. So for instance, if you choose the Choice 200, it's 200 for facility, 100 for home care. We have a bed reservation, right? We'll pay the facility up to 20 days to hold your bed while you're hospitalized or you're in a hospital observation unit. And I think that's super important, right? Someone goes off to the hospital, guess what? That facility is trying to quickly fill that bed as quickly as possible. We're actually going to pay to hold the bed so we can transition right back to that same bed when you come back, right? So make that very important for the consumer. We've got a care transition built right into this plan, right? It's going to pay for a home health care benefit for up to 10 days for anyone providing care for you. It can be a professional, family member, neighbor, friend, whatever it may be, but we're going to pay, right? And you can use that as you transition into the full benefit of the plan. And then a real nice benefit in these short-term care plans is our restoration of benefits feature. Restoration of benefits means if you access the benefits of the policy, let's say you need 7 or 8 months of a 360-day policy, and all of a sudden now you're free of care for 180 days, and boom, something happens to you 200 days later, the benefit will restore back to the original 360 days chosen. So again, a strong benefit. Restoration can be used once per the lifetime of the policy, but that's a real strong benefit to sell to a customer, and I think it's important that we talk about it. So we talked about our facility benefit that's going to cover you in a nursing home, assisted living, or a rehabilitation facility. Again, you can choose whatever the benefit period is, the 180-day or 360-day, and then you choose your daily benefit from the 1, 2, or 300. Home care benefit, remember, it's going to pay 50% of whatever whatever you chose initially, and we're going to show you how we can boost that up to the original benefit chosen through a rider. We walked through bed reservation. We talked about the care transition benefit. Restoration of benefit, again, is super important that you understand this one. And then here, just inflation, right? So we've got a rider. The first one we want to talk about is how are we going to hedge against inflation in the event somebody buys it at 70 and it's more likely they need it at 80, right? You can put a 5% simple inflation rider on here. I'm not a mathematician, right? So what we're going to use the simple one at $100 a day. It's going to be 105 next year, 110 the following, 115, 120, and so on. It's a very simple inflation rider. That's one way you can do it, or you can choose a higher dollar amount, right? So we can use the inflation rider. We can choose a higher dollar amount. There's a lot of different ways that you can kind of tailor make this benefit so the customer feels comfortable with premium and they feel comfortable with the benefit. So here's the one I've alluded to a few times. We've got the home care booster. We're excited about this. We see so far, we've seen a lot of folks choosing the home care booster. So if you choose the Choice 100 at $100 a day, traditionally you get 50% for home care. What this is going to do is going to boost it right back to the original daily benefit chosen, whether that's the 100, the 200, or 300. So essentially here you have 2 buckets of money that you can work with. You have a home health care bucket and a facility care bucket. You can utilize both of those right, for your maximum daily benefit period. So if you choose 360, you got 360 for home care, 360 for facility care. So that's something too that might separate us a little bit from the competition, is that we're actually utilizing two separate buckets in this case. So just quickly want to go over some rate samples for you guys so that you can see how cost effective extended care can be. Short-term care based policy. Let's just take a look at a 65-year-old, right? We choose a 65-year-old. This is someone that's aging into Medicare. You put them into maybe a Medicare Advantage plan or a Med Sup, and you start talking to them about the need for extended care. You can do the choice 100, 200, 300, $39, $78, or $117, right? So you probably see the value for the consumer is going to be in that higher dollar amount, the choice 300. So what I'm also hearing right now, a lot of folks are maximizing the choice 300, maybe leaving the elimination period off, or they're just doing a choice 300, adding an elimination for protection if they're in certain areas that the cost of care they know is going to be a little higher. So that's going to be up to the agent to kind of tailor make that with the consumer. So here's some monthly riders, our premiums on our riders. If you choose the home care booster, so going back to that 65-year-old, right, chooses the choice 200 for an additional $23 a month. They're now going to have the booster, so it would be around $100 a month for the two of them. They would get $200 for facility care, $200 for home care. And then you can see right there is your inflation options. If you want to hedge against inflation, now we're starting to obviously we're starting to build the policy to meet the consumer's needs. If they see the value in inflation and you know that this is going to be a good benefit for them, I always say, hey, listen, I don't make light a premium. Let's make the customer let them choose, right? It's not our job to determine what's affordable and what's not affordable. It's really their job. We can help them, we can guide them, right? We can give them advice, but we surely I'm not opposed to showing any premiums and allow them to make that decision on whether or not it's for them. So let's give you a couple examples here, and this is a practice, right? We call it Karen Lee. Karen Lee's pretty average consumer. Matter of fact, the one we've talked about at age 65, buying the short-term care choice 200. Right, she's got the 180-day benefit here. Adding the booster, she's around $100, $101.67 a month for a plan that really gives her peace of mind that she'll have proper coverage in place. So this is a very common rate example out there. And then here's another common one, right? Husband and wife. This is pretty typical of what you'll see out there. Again, we've got a pretty strong spousal discount, so we want to show you that here. This is a choice 300, 180-day benefit. They've chosen the booster on this one as well, so they're going to get 300 for facility, 300 for home care. They've got a spousal discount that's built into the plan, so for $259.24, they can have protection in place for both husband and wife. 0-day elimination on this plan, so it's a very this is fantastic protection for the consumer. All right, so quickly, gang, just want to touch on the application. Got you as a captive audience today. I hope you guys have been to our producer portal. We're trying to make this easier and easier every single day. You would jump into our producer portal at cignaforbrokers.com. You would then click on the Cigna supplemental benefits. If you're not contracted for Cigna supplemental, please talk to Brad and all the folks over at Premier. I'm sure they'll be happy to help you walk you through the contracting process with us. Once you do that, you'll jump into start a new quote. You put your zip code, date of birth, age, gender, and you start going on your quote. You build it right here. This is about as simple as it goes, right? You know, we're choosing the product, the monthly payment mode. We start going over the coverages, and then we'll talk about any of the deductibles or the riders that we want to add to this plan. And then you'll click into start an application, and boom, you're off and running on this plan. Guys, here's these are our underwriting questions, right? These are pretty typical within the industry. We've got question 1, question 2, and question 3. I'm just going to leave this up on the screen for a few seconds just so you guys can take a peek at it, but it's all pretty common stuff in the industry, okay? You'll notice too, there's a link at the bottom for a short-term care declinable drug list that has all the pretty serious drugs. A lot of the dementia, memory loss drugs are in there as well. So this is just really there for your education as you're kind of walking through the process. And then if you do a phone verification, here's the number that you can call. You can call phone verification right at time of sale if you do it this way. And then I always encourage, if you're doing phone verification, do it at time of sale. Surely you can't guide your customer through it. They're going to want to talk to your customer alone, and they'll kind of walk you through the process. But our line's open 8 a.m. to 5 p.m. Central Time. And then, gang, again, we got you as a captive audience. We talked a lot about our short-term care plan. We're super excited about it. So we've also got our WinCentive programs built around this. So WinCentives is our incentives that we have through the course of the year on all of our sup health policies that are out there, to include MedSup. We've got a direct mail campaign that folks can win every single month by utilizing our MedSup and selling our MedSup every month. I mean, I've got agents right now, they're getting 4,000 or 5,000 leads a month sent out from they can tailor make those campaigns just because they're really selling a ton of our MedSup. They also get an additional $100 bonus for MedSups for plans F, G, and N and open enrollment plan N, right? And this is all retroed back to that first application that you write. So if you write 4 applications a month, I mean, there's additional bonus money involved. And then for short-term care, gang, we've priced this plan accordingly. We've got strong benefits, but we're still going to give you an additional $25 bonus for every 5 applications you write. So again, we just want you to start engaging in this. Ask about this, right? Get that, build it into your everyday sales culture. Create that Just Ask campaign. And once you do, not only will you be doing a great thing for your customers, but you'll also have an opportunity to earn additional income stream through our incentives at Cigna. And then pretty cool, we've got this year, our 2025 incentive trip to the Montage Healdsburg. We're going to Napa Valley with all of our top agents. And you can see for writing agents, it's $180,000 of issued annualized premium. Doesn't matter what product it is, whether it's our sup health products to include short-term care, MedSup, combination of them both. Last year we were in Maui with our group. Next year we're going to be in Napa. So I'd love to see you guys there. I'd love to see the folks from Premier there as well. And anything that I can do to help, feel free to reach out to Brad, and I'm happy to help kind of put a plan. So Brad, I know I've done a lot of talking, right? I think we're about 45 minutes into this presentation. So always a little challenging when you're not doing it, in person. But if there's anything else, again, I want to thank you for your partnership and the partnership that we have with Premier. You guys have been absolutely fantastic, and we're here to help anything that we can do to help get you guys jump started on this short-term care plan with Cigna.
Doug, thanks a lot for everything. Like you said, it's a lot to cover, but no, I think you did a great job. Just hitting the highlights and almost everything from start to finish. A couple questions that came in. Are they able to run quotes on through that e-app, or how do they run quotes on the?
Yeah, they can run the quotes through the e-app, right? And we've got a rate sheet that they have, so it's kind of the old-fashioned paper rate sheet. And we're right now we're in development for kind of a quote platform that they can save to their hard drive, so that they don't even have to be internet. They don't have to be on the internet. So that's to come. It's my understanding that we're working with a vendor right now to be able to provide that to you guys shortly.
Okay. And as always, I tell my agents, hey, if you want me to run quotes, yeah, send me the information. I'll be happy to do it for you. So the other thing is, do you have any almost like, I guess, on-demand training? Like if they just wanted to, hey, I just need a little 5-minute tutorial on how to run through those, how to do an e-app.
Absolutely. So they can jump onto an on-demand training at Cigna for brokers. They can pick their time. Obviously, they can pick their product line that they choose if it's short-term care, and they can do the training right on demand. They can join a live training, which is always nice to jump into a live training with our training department. And then we can always continue to do additional kind of group trainings like we're doing today. So we want to make sure that we're going to train you where you want to be and how you want to do it. There's no right or wrong way.
Sounds great. Yeah. And then, and kind of along those same lines with running through the e-app, it almost spitfires hey, you still need this information. You still need that information. And then I guess along with that, underwriting. that'll still take, if you complete everything, everything's, all the answers are no's. You get kind of you're somewhat of a green light, or it'll still take 3 to 5 days to under.
Well, you can be somewhat of a green light on that. We want to make sure that obviously they're going to bump it up against a few things, right? They might bump it up against the MIB, they might bump it up against the pharmacy, just to make sure that the medications that are listed on the application are truthfully, are true. And, we're not saying that any agent would be egregious on that. One of the things that I always said as an agent too, when we sat down is, listen, we don't necessarily want to volunteer a whole lot of information, but we want to answer every question truthfully to the best of our knowledge. We want to make sure that we're documenting the medications properly, because they've got a way to check that, right? And we don't want to go into a contract or an official relationship with a carrier untruthful. So yeah, I mean, if you do your due diligence, it might only take a day or two to get the green light on this one. And sometimes, boy, they might even know before they walk out of the house. So it just really depends on where our underwriting team is as far as applications are concerned.
Okay, no, sounds awesome. And then last question, big one that I always get is marketing. Do you have any kind of like social media? Do you have any like short videos or something that they clip on either LinkedIn accounts?
We do, yeah, we do, and that's working with our marketing team. Surely we can help you with that. So right now, I know we're in process of developing strategies around social media marketing for short-term care. We've got them, of course, with other products. We do require the agent to take a quick, I think it's like a quick 20 or 30-minute social media training. And then once they do that, they'll have access to all the available pieces that are out there. I just have to really dive in to see where we are right now with the social media collateral for short-term care. But if we don't have it now, I know it's coming.
Okay. No, sounds great. Well, awesome. Hey, you know what? That is all I have for today. And appreciate your time. Appreciate everyone that has joined us on this webinar. And yeah, with that, cheers. Happy selling.
Fantastic. Thanks, gang. And Brad, I always appreciate the relationship, and anything that I can do, always let me know.
You bet. Thanks, everyone.